Hello and welcome back to our segment on what is the stock market. This is Matt Williamson with Sigmanomics, and this segment we're going to be talking about the who's of the market. Who are the players in the market? And for this video, we are going to kick things off with the investors. Investors, when people think markets, typically that's the first thing that comes to mind is investors would be in the market. So who are the investors? Well, there are two major groups. There is the smart money and the dumb money. Now, these are obviously derogatory terms depending on which side of the fence you're sitting on there. But if you are a retail investor, that's you and I, unless you work for a bank or a hedge fund or a pension fund or an endowment or something along those lines, if you are an individual investing in the market, stocks, bonds, options, futures, whatever, then you are known as dumb money. This just means you don't have the same information or access to the same information as those other larger entities do. It doesn't necessarily mean you're dumb, it just means you don't have as much information. Okay. Sometimes that might be called the small money as opposed to the big money. So big money or smart money, on the other hand, those are going to be your larger hedge funds, your pension funds, your mutual funds, your endowment, your family offices. All these entities have much more dollars than you or I do. All right, they command millions, billions of dollars and have pretty much unlimited resources at their disposal in order to decide which stocks to pick, which bonds to pick. They have entire teams of researchers taking people out to lunch, trying to pick CEOs' brains about what's happening here and there and everywhere. And again, just basically fountains of money they can spend in whatever way they want to try to find out any information they want that will drive their investment making decisions. Okay. If I had all the money in the world, I would do one thing. If my daughter had all the money in the world, she would probably buy 1,000 cats. These people like to spend a lot of money in research so that they can invest money for their clients and earn a return and thus make themselves money. All right, so those would be your big money slash smart money. So if you're trading and you hear traders talk about, oh, the big money's doing this or the smart money's doing that, these are the groups they're talking about: hedge funds, mutual funds, pension funds, other kinds of funds, endowment funds, funds of funds, exchange traded funds. There's all kinds of funds in the market these days. So that would be your big money or your smart money. Other thing worth mentioning here is the long-term versus short-term mindset. Okay, we've talked a little bit about day traders and swing traders. That's going to be a shorter term mindset. For the most part, the investors in the market are going to have a longer term mindset. They're going to be looking to pick up good companies for a low price, lower than they should be valued in the market, or they're going to be buying things to hold it for, a year at a time, 5 years at a time, 20 years for a time, just long periods of holding, as opposed to our shorter term traders, the speculators, and people that like to make bets and gamble in markets. They tend to have a shorter time frame in terms of their investment. Technically, we would lump them all in as investors, but certainly a subset of those could be and are called traders. All right, that's going to do it for this video. Our next video is going to be on hedgers and their role in the marketplace. So thanks for tuning in, and we'll see you in the next video. Take care.